Hello and welcome everyone to today's webinar, a step-by-step walkthrough of the PPP loan forgiveness application. Specifically, we're going to walk through the new easy form. So my name is Mike Vanoy. I'm the head of marketing here at Assure. And let's talk about what we're going to talk about and what's not included in today. So leading up to the new easy form was a new piece of legislation. It's been an unbelievable year. There's been more major HR legislation passed in the last 90 days than there has in the last decade. But the Paycheck Protection Program Flexibility Act really made things a heck of a lot easier, a heck of a lot better for small businesses. So we're gonna walk through what some of the major components of that change are. That came through the first week of June. And the subsequent SBA guidance that came along with that. But then most importantly, where this really comes to life and rubber hits the road is actually filling out an application for forgiveness. And so we're going to walk through the criteria of who qualifies, who doesn't, and what do you need to do for the easy application for your PPP loan forgiveness. And then if we have time, we'll take on some questions. What's not? As always, this is not a tips and tricks how to game the system and maximize your PPP forgiveness at the expense of hardworking taxpayers. This is a government-sponsored program. The government doesn't have any money. They only collect taxes from us hardworking small business people. So we want to help everybody on this call to truly maximize the benefit of their PPP program. But we're doing that by just explaining how it works and teaching how it works to the best of our ability. We're not going to walk in detail for the qualifying PPP expenses. We've done several webinars on those topics. So I'm going to briefly cover them because it is relevant as you got to put some numbers in some fields. But I'm going to point you back to previous webinars to source that information. And we're not going to walk through the original forgiveness application. It's a bit of a beast. There's a handful of you that are still going to have to fill that out and go through that process. I think the lion's share of small business owners in entrepreneurs are going to be able to take advantage of the easy form. And as always, at Assure, we got a bunch of people that have been doing this payroll HR thing for decades. We like to think we really know what we're doing. We have thousands of small business clients that we help every single day through all this information. But our guidance should never replace your legal counsel or the advice from your CPA. And at the end of the day, when it comes to PPP loans, your bank is going to dictate the rules to you. So the SBA creates the rules, but it's your bank who really interprets those rules and lends accordingly, and they're the ones going to require documentation from you. So with that safe harbor said, if you don't get what you need from today, for sure jump on one of many of our pre-recorded webinars. This is a partial list that are just specific on COVID topics. So if you need to get a deeper understanding of what are the qualifying expenses, what counts towards qualifying payroll dollars, what doesn't, what types of money can you spend on, say, utility and rent versus mortgages versus cars versus real estate, etc. All of that's in there, tax breaks, etc., with the FFCRA and CARES Act. But that, I would say, this is we're going to be just like a math class. That's all foundational stuff you kind of had to know for all this to make sense. So if there's any missing pieces from today's webinar, by all means, just jump online to assuresoftware.com/COVID-19, and there's the whole list of recorded webinars that has information on these topics. So with that, let's talk about the PPP rule changes and why the quote-unquote rules aren't always necessarily the same for everyone. Technically they are, but it manifests itself differently for different people. So we do one or two of these webinars a week on different topics. It was June 3rd that we walked through in step-by-step detail the original forgiveness application, PPP forgiveness application. And it's a bit of a bear. It's got this thing called the Schedule A that you really got to document employee by employee, proving out as part of the application process that you didn't cut salaries and that you brought all your headcount back. In the way in which you had to do that was not easy. So there was also plenty of complaints from all kinds of small business advocates. from local from states and local organizations to chambers of commerce. In Congress heard, and they acted. So they implemented this July 5th, just 2 days after our last training on this topic. They passed the Paycheck Protection Program Flexibility Act. So it signed into law June 5th. As always, it takes a little while for the SBA to then figure out how to actually apply that law. So a couple weeks later, June 16th, was 11 days later, the SBA then published new guidance. They also published this new form. So there are some changes to the original 3508, the 3508 PPP forgiveness form that make it easier than it was. But more importantly, there are now two forms. And so what we're going to unpack today is the easy form that was published on the 16th. So beyond just the form, the new law really did a few things to really make it easier and help small businesses. I think the first one is maybe going to have the biggest impact for small businesses. So if you haven't been on a previous webinar, and this may be news, that if you got funded for your PPP loan, but you were still in a city or a state that you were in a shelter-in-place order, you couldn't even legally open your doors. Your 8-week window, the clock was already ticking, and so you had to spend 75% of your money of your PPP funds on payroll, and maybe you couldn't open the doors, so you didn't have payroll to spend it on, right? And so. But yet the calculation to determine how much your loan was going to be was based on a 2-month payroll. So probably the most impactful change that they implemented was extending that window from 8 to 24 weeks. So 3 times the length that you have. So basically, you took to calculate your loan, you had 2 months payroll times 2.5. That was the max of your loan. So that basically the formula basically worked out to say you got some money to run overhead, but most 75% of the money is allocated to payroll. Well, here you've got 3 times that same length to spend that money on your payroll. So there's an excellent chance even companies and businesses who couldn't open when they got funded are going to have enough payroll dollars alone to spend their entire PPP loan just on the payroll dollars. So that's really good news. And for those who are maybe in a little bit different business model that aren't maybe as labor intensive, maybe they have heavy capital costs and therefore have really big interest rates on machinery or interest expense on machinery, or maybe warehousing where there's very low employee labor expense, but you got really expensive real estate. They lowered the threshold from 75% of all PPP money having to be spent on payroll down to 60%. The other thing they changed was they changed the window from anything that you got in a PPP loan that didn't get spent on qualifying expenses. Originally was you had to pay that back within 2 years, and they extended that to 5 years. So if you got funded after June 5th, after this law passed, it's automatically at 5 years. If you were funded earlier, which is the majority of businesses, but I assume the majority of people on this call, that means you're also going to have to work with your bank because you signed loan papers that said any funds not used in the prescribed manner, you're going to pay back within 2 years. So you're going to have to work that out with your bank. Kind of can't imagine banks not willing to work with you on that, but do know that you're going to have to take that step because you have executed loan agreements for a 2-year window that will need to be modified. So presumably, most all lenders are going to have no issue with that. They're going to want to work with you. And then the last thing is extending the deadline to rehire workers. Back in early, I shouldn't say early, I want to say it was March 19th when first FFCRA Act passed and the CARES Act and PPP funds were first being contemplated in Congress. They were talking about a two-week shutdown, right? So they knew it would have a big impact on the country and on small businesses. And so, okay, let's implement this 2-month window for the 8-week window for qualifying payments. And if you can't bring back your people right away, as long as you bring them back by the end of June, you're good. Well, this thing obviously went a lot longer than anybody realized at first. At least most people realized at first. even today, there are some businesses, if you're in a concert venue, there are bars that were open and now back closed in some states, right? So some businesses, you simply couldn't bring your people back, so they extended that deadline from the end of June to the end of December. So those are some really big, impactful things that were part of the Paycheck Protection Flexibility Act, all really good news for small businesses. So we're excited about that. So if you've been in previous webinars, you've seen me talk about this slide. Just real quick. It is, so Congress passes laws, then it's the SBA who writes the rules for the implementation of these laws. But unlike say the EIDL loans, the economic impact, disaster impact loans that you borrow directly from the SBA, all of these PPP loans are managed through banks, something like 5,600 some odd banks participating in the program. So even though there is a singular set of rules that come from the SBA, at the end of the day, you're borrowing the money from your bank, who then interprets those rules. So depending on, say, the risk tolerance in the processes within any given bank, some banks are going to have online automated forms. Other banks are going to require all kinds of paper. So it's going to be all over the place, working bank by bank. And so as we give guidance here and tell you how it is and what the rules are, don't let that shake you. You're going to have to work with your local bank and essentially follow their guidance. They're going to relatively be in the same ballpark, but at the end of the day, the bank is the one who has to certify. You have to certify that all the information is accurate that you're submitting to the bank, but the bank has to certify to the SBA that they have inspected to their satisfaction that information is also accurate. So that's really where the variance is going to come in. Okay, with that, let's go ahead and jump into the actual loan, the application itself. So I put the URL here. You can write it down fast if you want. The reality is, if you just simply go to Google, type in SBA PPP easy form, you're going to find it. It's going to be right at the top of your search results. But if you hop on the SBA's website, click the download PDF, you'll pull up the form. It's right there. And so just kind of side by side. So from a few weeks ago when we did our step-by-step guide through the original loan forgiveness application, the SBA form 3508, that thing was a bit of a beast. It was 11 pages. And as I referenced earlier, it's got this thing called the Schedule A, which is how you prove out literally employee by employee. So if you're a small business, real small business, no big deal. But if you're a large small business, 100, 200, 300 employees, certainly becomes onerous. To list out employee by employee, proving how you're not cutting salaries, proving how you are maintaining headcount. So the new form, the 3508 Easy, it's so simple. It's just 3 pages. The first page is the form. The second page is your certification. So basically you're given, you're just gonna initial by boxes, validating that you certify this is accurate, correct information to the best of your ability. And page 3 is optional. You're just gonna provide demographics. So we're probably gonna spend as much time in the next few minutes here talking about who does and doesn't qualify for the easy form as we are gonna on the form itself. So super good news. What is longer and we need to spend a little more time on really is the instructions for the easy form. So it's 4 pages. The most important thing, I highlight it in yellow here, this is the test that you gotta pass to see if you get to use this form. If you don't pass this test, if you can't check the box yes to one of the 3 sets of questions, and I say sets of questions, I'll explain that in a minute, then you're going to have to use the long form with the Schedule A. And so it's easier than originally published, but it's definitely a lot more complex, a lot harder than this easy form. So with that, let's go ahead and take a look at the components of the instructions. So this isn't the form itself. This is the instructions to complete the form, and I'm at the top of page 1 of those instructions. And again, just If you don't find it on the SBA site, just Google it, SBA Form 3508 Easy Instructions. Include the word instructions and it'll be one of the top links. Now the first, so if you can check the yes box on any of these three options, then you get to use the form. Okay, so the first one is simple. So basically it's just for self-employed people. So if you're an entrepreneur, you don't have any employees, it doesn't matter if you're, an independent contractor, a sole proprietor, what your legal structure is. If you don't have any employees, and essentially, I think this may not be all encompassing, you'll have to talk to your accountant, but basically if you report your business income on a Schedule C on your tax return, then you check that box and you're in. So then the form is easy. The next two options are a little more complex. They are and statements. So as you read, I'm covering up a little bit of the text, but you'll see when you get the application, for option number 2, you got to meet both criteria here before you can check the box. So criteria number 1 is if you did not reduce pay by more than 25%. So it says if you didn't reduce annual salary or hourly wages. For those who attended the prior webinar, you remember the complex tables and schedules you had to fill out of Schedule A to fill this out and calculate and figure this out. Essentially, from an SBA standpoint, they're taking your word for it. If you check the box because you said, hey, we didn't reduce pay, then the SBA has just made it easy on you. What the SBA has not done is created a loophole for you to game the system and lie about it. So if you have, it's going to show up because your bank is still going to ask for all the documentation from your payroll provider. If you're doing payroll in-house yourself, from your software, you're going to have to document and provide the audit trail that proves you didn't do this. What the SBA has essentially done is just made the application process easier. They haven't lifted the burden a single ounce for your requirement to then provide all the documentation to prove this. Okay, so test number 1 for option 2, you didn't cut people's pay by more than 25%. Anybody's, I should say, not everyone. So you're talking about on a person by person. You didn't cut any person's pay by more than 25%, and it's an and, not an or. You didn't reduce number of employees. Now this is an important one because one of the things driving complexity of the first 3508 forgiveness application was an FTE, full-time equivalent calculation, because it's different than a lot of people are used to, for example, who do, say, ACA reporting. It was a bit of a foreign concept for calculating FTEs and sometimes complex. So some businesses, what if you have employees that are salespeople and work on 100% commission? What if you're a salon and your W-2 stylists are 100% commission people and they don't necessarily have set hours? So how do you calculate a number of hours worked or a schedule of hours or salaries? There are enough hybrids that left some ambiguity in the calculation of FTEs. This form, the SBA has made this dramatically easier because it's really just saying number of employees. So you're going to see as we get to filling out the form, it's saying, okay, if you had 10 employees at the beginning period and you have 10 employees at the ending period, it does. If 5 of those employees were full-time and 5 were part-time, it's 10 employees. So it really is just the number of employees. And for those of you guys who remember, it didn't ask during the application process for this complex FTE calculation either. So it was tripping people up filling out the forgiveness apps, because all of a sudden now you're having to calculate FTEs based on a formula that was never part of the submission process for the application in the first place 3 months earlier, 2-3 months earlier. So this dramatically simplifies it. And at the end of the day, what I'm always going to come back to is this is going to be between you and the bank. So again, this is not a loophole that you could have had, say, 10 full-time employees and you brought back 10 part-time employees. That's going to show up in your pay test, in reducing pay, right? presumably your salaries would be, your pay would be cut in half if you did something like that. So the bank is not going to let you off the hook and say, hey, you can game this, but it's also not going to make you just jump through hoops, filling out forms for the sake of filling out forms. When you had 10 employees before, you got 10 now. It might not be the exact same 10 human beings because some people were sick and had to take care of someone who's sick. Some people were making more on unemployment and refused to come back. Some people just didn't feel safe and didn't want to come back. So regardless of the reason, it's just two simple questions. You didn't cut pay by more than 25% and you didn't reduce headcount? Check the box, boom, you get to fill out the easy form. Option 3 is really similar. First question is the same. You didn't cut pay by more than 25%, but this added the provision for these special businesses who are much more impacted, right? Bars, restaurants, gyms, salons, tattoo parlor, any kind of entertainment venue, movie theaters, or other types of entertainment where you just can't social distance and they just simply weren't allowed to be open. So giving a much more of a pass instead of making those people who are already hit really hard, instead of punching them in the gut again by making them fill out a form that was impossible. The Congress passed the law, SBA implemented a much easier policy. You can just simply say, hey, yeah, our industry, we couldn't open our doors. The local health commissioner said we couldn't open for business. So we didn't reduce anybody's pay, but we also couldn't bring everybody back. As long as you can document that to satisfaction of your bank, then you're good. So long-winded explanation, but like I said, it's the criteria in which to fill out the form. Whether you get to fill out the easy form is really as much to understand about this as it is the form itself. So number 1, if you're self-employed. Number 2, you didn't reduce pay and you brought everybody back. Or number 3, you didn't reduce pay, but you didn't bring everybody back, but there's a good reason because you couldn't. So if you can check the box on any one of those 3, you get to fill out the form and make your life a lot easier. All right, with that said, let's go ahead and jump to the easy form. So literally a screenshot of the form here. This is the top half of page 1. And I'm gonna, if you look to the dashed call out in the top left, most of this is repeat. It's what you've already seen when we did our webinar a few weeks ago. Even if you didn't, it's real simple stuff. You don't need to attend to anybody's webinar to learn how to fill out the top section here. It's your business name, it's your address, your EIN, some contact information. You're gonna need your PPP loan number and the lender's loan number. So if you don't have that, you might have to pick up the phone or send an email to the bank and get that from them. You're gonna need the PPP loan amount. You're gonna also need the disbursement date. And so the disbursement date, if you remember, that's the day that they wrote you the check or that they deposited the money in your account. So it's not the day you applied for the loan. It's not the day they said you got approved. It's not even the day that you signed the loan documents. It's the day that they gave you the money. All right, so with that, let's talk about some of the, I think, more important call outs. So the top left, darker blue. So we got a box around a new area of the form. So it's employees at time of loan application and employees at time of forgiveness application. So this is where we avoid that complex Schedule A from the prior application. And it's just simply you declaring. It really is that simple. At the time I filled out my PPP loan application, this is how many employees I had, boom. And as of today, I'm filling out this forgiveness application to give the bank. This is how many employees I have. Now, it's going to be up to your bank then to verify that. And so through payroll reports, through whatever documentation they decide is necessary, you'll have to provide that information, but that's really not any different than you would have had to do otherwise. What's easier is the application process. If we drop down to the top right, so the next row here is about EIDL advance amount. So a lot of people have applied for EIDL loans, the EIDL loans, economic impact disaster loans, and up to $10,000, you can be awarded $1,000 per employee. So a lot of people got $1,000, $2,000, $5,000, up to $10,000 advances. that money is gonna be deducted from the forgiveness amount for your PPP, so you can't double dip, it'll count towards that forgiveness. But whether you did or didn't get approved, you still gotta put down your EIDL application number. So you might have to do some digging to find that. Hopefully you kept your documents when you sent the application, but put your it's the application number. So whether you did or didn't apply, you gotta put that. That's how they're gonna cross-reference you. Okay. The next, we talked about it a little bit, and I left it as a call out because I think it's important. It wasn't, there was an update, there was an interim update from the Small Business Administration giving guidance on pay period coverage. There was always this question, back when the window was only 8 weeks, it didn't get extended to 24. There was always this difficult accounting question, like, okay, I got funded in the middle of the week, but my pay period starts, say, on a Sunday or a Monday at the beginning of the week. You know, do I do cash accounting? Do I do accrual-based accounting? How do I run payroll reports that make it easy for me to kind of match up and prove the money I paid when, you know, the pay periods don't match up the funding dates? And so the SBA created this thing they called the alternate payroll covered period. So the covered period prior to that technically would have been the day you got funded to 8 weeks later. And so now you have a choice in your window of either 8 weeks or the 24 weeks for your covered period, or you could choose the alternate payroll covered period. So for example, in that, if you got funded on a Wednesday, but your payroll, you run a weekly payroll, your pay period starts on a Monday, you can wait until the following, not prior, but the following Monday to be the beginning of the pay period, of the covered period. So covered period is either going to be whichever window you choose to work with your bank, either 8 or 24 weeks from the day you got funded, or the alternate payroll covered period will be the next first day of the next pay period. It's a bit of a tongue twister. Last thing I would add on here, call out to the bottom right, the safe harbor impact. Congress declared pretty early on, you know, there's, if you guys remember watching the news, there's a lot of concern, hey, this is supposed to help small businesses. Shake Shack's got 7,000 employees. I could be off by 1,000 or 2, but big company with, you know, $100 million cash in the bank. Created a storm, right? So I want to make sure this was truly for small businesses that had need and qualified. Anybody public, you know, like Assure is going to go through an audit, and then anybody who's just took a bigger loan worth more than $2 million, you check in the box declaring so, because you're going to get audited. So keep that in mind. I almost don't know why they put that in there, because anybody who's got more than $2 million loan, you're going to get audited no matter what. It's going to be automated on the back end, but important to declare there whether you have more than $2 million. Okay, let's go ahead and unpack the rest of page 1. And this may be disappointingly simple. Because the real test was whether you get to use the easy form or not. So it's it's 2 parts. It's lines 1 through 4 and 5 through 8, and that's it. So lines 1 through 4, it's your payroll cost. And so without rehashing one of the prior webinars, check it out on demand. I think it's named Maximize Your PPP Loan Forgiveness. It is all your qualifying payroll cost. And so just remember, that means payroll on a per employee basis. If you got somebody who makes $125,000 a year, it's the first 100,000 counts, not the 25 above and beyond. It does include employer paid health benefits like health insurance, you know, vision, medical, dental, etc. It includes 401k matching. Even includes state and local payroll taxes. So, you know, unemployment, UI taxes is even built in there. It excludes any of the dollars for over $100,000 on a per employee basis. Also excludes, excuse me, federal taxes like Social Security and Medicare. Next line, it's total interest payments on real or personal property. Early on, there was a lot of questions about this, whether interest on mortgage meant just for real estate. You know, for if you weren't a renter and you owned your building, but you got mortgage payments. But the SBA did provide clarification that it's real or personal property. So you can't include principal in this calculation, and you can't include prepayments. It's interest only during that period. But it does expand beyond simply the building that you work from. So it's not just real estate. This could be, while you can't necessarily expense cars in a car lease, you could expense the interest on a loan against a car or a fleet of cars if it has to do 100% dedicated for business use only. It would also apply if you're a machine shop and you've got, you've capitalized the purchase and you have loans against some big CNC machines. You can't count the payments, the principal portion of those payments here, but you could include the interest on those payments. So it's real or personal property. The only caveat is you've got to have purchased it before February 15th. So the next two, there's not a whole lot of explanation, right? It's business rent or lease payments and it's business utility payments. Again, I would just point you back to the prior webinar, Maximize Your PPP Loan Forgiveness, where we actually go into quite a bit of depth explaining and clarifying what are qualifying and are not qualifying versions of these, but it's pretty straightforward. From there, it's a simple comparisons, line 5, 6, 7, and 8. So line 5, you're just simply adding up the lines of 1, 2, 3, and 4 from above, right? So it's essentially your qualifying expenses. It's your payroll, it's your interest, it's your rent, it's your utilities. Line 6, it's simply the dollar amount of your loan. Stick it in, and then line 7, you're going to take all of your payroll costs, so it's from back to line 1, divide that by 0.6. So if you remember Congress in the Flexibility Act, they lowered the threshold that from 75 to 60% of all PPP dollars had to be spent on payroll. So to test this, just take however much your payroll cost was during that qualifying period and divide by 0.6. And so it's going to give you a number. And how much your loan forgiveness is essentially just going to be the lowest of those. So if your PPP loan amount, line 6 was say 100 grand, do that for easy math, and you spent more than 100 grand on payroll, interest, rent, utilities for line 5, and your payroll divided by 0.6 was more than your loan amount, then you got 100% forgiveness. If any of those other amounts come lower, that's going to be how much your loan forgiveness is. So it's really simple. All right, page 2. This is just you pricking your finger and in blood and saying, I do swear that I'm telling the truth, the whole truth, nothing but the truth. You got to initial and certify that all this stuff is accurate. Again, no gamesmanship. These are hard-earned taxpayer dollars designed to help small businesses in a once in a 100-year event. So you should maximize everything you possibly can. You should also tell 100% truth and only report the truth. So that's what this page is asking for. Your bank is going to need and require this from you because they're going to have to go through a similar exercise with SBA, and there's no way in hell they're going to put their entire business model on the line for one of their clients trying to get cute on PPP forgiveness. And the last page, it's optional. So it's simply demographics, whether you want to supply that information for reporting. We won't wade into those waters of why you should or shouldn't. Lots of strong personal opinions. Just know that it's optional. And if you choose to, you can. If you don't want to, you don't have to. Okay. That is the easy form. So from the top, I think the important changes from the Flexibility Act have really are going to help small businesses a ton. In where you need to spend most of your time when looking at the application is read the instructions and see if you even qualify for the EC application. If you do, which I suspect is the lion's share of people on this call, then you saw the good news. It's a pretty darn simple form to produce, and you get to work with your bank to figure out what the documentation is to prove it, rather than having just yet one more hurdle in that complex long form. And with that, before I jump to questions and answers, I want to offer up a free resource. So we've published recently a new eBook called the CEO Guide to Reopening Your Business in the COVID Era. So you can see screenshots of the pages here, about a dozen pages. Lots of resources, anywhere from how to provide a safe work environment, to maximize loan forgiveness, to how to deal with HR issues when you get sick employees or people who don't want to come back to work, how to handle leave requests, what are your requirements, what are your obligations, what are you not obligated to do under the new Family First Coronavirus Response Act, FFCRA. So it's a really great resource. It's free. Hop on to suresoftware.com/COVID-19. Click on the offer. You'll recognize the guy in the mask and download the ebook. So with that, we're about 37 minutes in. I think we got some time for some Q&A. I will say a couple things. Number one is go ahead and just use the GoToWebinar user interface to populate questions. I'll take as many as I can handle here. I'm not going to dodge any questions. I'm also not going to pretend to be your accountant, your banker, or your lawyer. So much of this, so I probably won't be able to handle anything that's regionally oriented. If it just simply is too technical, I'm just going to say, hey, you're going to hear me say the answer an awful lot, I suspect. You're going to have to work with your banker, because if you remember that one slide, we had the logo of the SBA, the bank, and then you're borrowing the money from the bank. They are the ones interpreting the rules from the SBA. And if you disagree with their interpretation, that's for you to work out with the bank, not for you to work out with me or the SBA. So they're the ones that are going to have to certify. So with that, let me jump into Q&A, and I see a bunch of them here. Okay. Should our business apply for forgiveness when we reach the 24 weeks, or should we wait until December 31st? I don't see necessarily, Barbara, a reason to wait, especially now that we have the new guidance that the SBA has said you have until December 31st to hire anybody back. So if you were to fail the litmus test of, maybe you didn't reduce anybody's pay, but you didn't bring everybody back yet, and maybe you were not a qualifying business, so by law, maybe you should have been able to bring everybody back, but you didn't, then you still have until the end of the year to do so. So my suggestion, money today is better than money tomorrow, that as soon as you qualify, I would, especially once you hit your 100% threshold, as most businesses who are able to open during this period will hit with payroll dollars alone. You're not even going to need these non-payroll dollars in many cases. I would apply as soon as you can. Get that loan off the books, turn it into a grant, and now don't have liability in the books. At the end of the day, it's not going to impact your cash because the money's going to be sitting in your account either way. It's really a balance sheet issue. But when does that loan turn into just cash in the bank? So I would say my personal guidance as a entrepreneur, small business owner, and consultant, I would say sooner rather than later. Do it as soon as you qualify for the full amount. But at the end of the day, as always, ask your bank and let them guide you through that. So got a question about, I won't make this a big sales pitch for Assure, but asking, do we have spreadsheets or anything, tools that can help? For Assure payroll customers, we have these reports built right into our product. Excuse me. Excuse me. Frog in my throat, get a drink. We have the reports built right into our product to help with these calculations. So if not, you can't necessarily submit a spreadsheet if you have to use the long form because you got to fill out their paper anyway. All right, got a few messages throughout that we got audio problems, so forgive me. Hopefully you guys were able to hear enough of it. Certainly we're going to have this thing recorded and published on the website. is line 8 an error? Isn't the forgiveness 100% if payroll costs meet the 0.6 requirement? So it's simply the lesser of the three. So if your payroll costs divided by 0.6 exceed the PPP loan dollar amount to begin with, then that by default equals 100% forgiveness. Who can use the easy form versus the long form? So forgive me if maybe, Steve, you missed the audio portion of that. That's really the middle of the talk of who qualifies. I'll kind of recap. Number one, if it's sole proprietors, you don't have any employees, I guess really regardless of your legal structure, you don't W-2 yourself, so you don't have any employees. Most likely, you probably report the business income on Schedule C of a tax return. That's one group. Second group is if you have not reduced payroll expense and paying your employees by more than 25%, and you have not reduced headcount, then you could check that box. And then number three, if you haven't reduced people's pay by more than 25%, and the government essentially prevented you from opening, local health orders or something, you couldn't open your business because the type of business you're in. If you meet the criteria of any one of those three buckets, you can check the box and then you can use the easy form. If you don't meet one of those requirements, so you've cut people's pay by more than 25%, or you were in a business in a geography that legally you could have brought people back but didn't or were unable to, then you're going to be subject to the long form. Again, ask your bank. They're going to be the ones to verify whether you can or can't. But that's explicitly what the SBA says. Boy, we got a long one here, so we'll see if I can handle this one. Borrow unable to operate in the same level due to compliance requirements. We're a church, could still not meet in person, thus fewer hours, lower pay for childcare. We do have online services, and our clergy and office staff are working to get paid normal hours, similar last year. Can we check the box to qualify? So the way I interpret the law, Michelle, is absolutely yes. So of the three buckets, that would be bucket number 3. So if it's not binary whether you were or weren't open for business. So yeah, church is a perfect example. Use a different type of example. If you're a gym, maybe you simply couldn't even open at all, right? Versus a church, maybe you could, or a restaurant, maybe you could open, but you could only do curbside delivery. So you only got maybe 10 or 20% of the staff that you used to. Sounds like you're describing your church the same way, that, okay, you didn't close the doors, you still had staff to pay, but it was a greatly diminished factor because you were following local health ordinances, presumably, and you couldn't have groups of 10 or more kind of thing that couldn't social distance. So I would say the answer to that is yes. As always, the final determination, ask your bank. If you don't like that answer, get your CPA to help answer the question for you. Extension of 8 to 24 weeks is only for loans made after June 5th. So technically that's true. And so the 24-week extension is, so let me take that back. So as I understand, our reading of this is, so there's a couple components. The window for qualifying expenses is 24 weeks. That was simply extended. The loan forgiveness. So if you, let's say you didn't get 100% forgiveness. So maybe you only spent 50% of the money on payroll, so you didn't meet that test. Maybe you reduced headcount. For some reason, you had money, you got a $100,000 loan and you owe some money back. The way the law was originally written, you would have 2 years to pay the rest of that money back. And so if your loan was after June 5th, it's going to originate, that loan will originate with a 5-year payback for any non-qualifying expenses. But if you got your money like most people probably did before June 5th, you signed loan agreements that your repayment was a 2-year period. You'll have to work that out with your bank if you want to extend that to 5. That's only if you have money that you even have to pay back, because the comparison window, the window for calculating your payroll cost and your other qualifying expenses, that did change to the 24 weeks with the passage of the Flexibility Act. Good question, Mary. What if my employee found another job and I hired a different employee? Yeah, great question, Robert. So it doesn't have to be the exact same human being that comes back at the same rate. Really, so I would go further. If I have John Doe working for me pre-shutdown, and I hired Jane Smith to replace John because John didn't come back for whatever reason, as long as I'm keeping pay, whether it's hourly or salary, as long as I'm keeping that whole within the 25% tolerance, then I'm good. Now, if John refused to come back to work, maybe John just didn't feel safe. Maybe John was making more money on unemployment and wanted to stay on unemployment. Maybe John wanted to come back, but had to take care of somebody sick. As long as you have documentation, print a text, an email, doesn't have to be some certified letter. As long as you have documentation that that employee refused to come back, then you will not be penalized for that. You will not, that won't count towards your employee retention test. Do you have suggestions or can advise if criteria has been changed where S Corp businesses that file with K1 versus Schedule C cannot even be eligible to get assistance? You know what? I don't feel. I mean, I probably have an opinion, but I don't feel qualified to publicly state that. I mean, if you're a sole proprietor, you're a sole proprietor. So how you handle that for tax strategies, K1 versus Schedule C, at the end of the day, it's going to be your bank's interpretation. So I would say work that one out, Michelle. Sorry, work that one out with your CPA to make your case with the bank on how best to approach that one. Your help is appreciated, Michelle. Thank you so much. Very nice of you. How can a company or a self-employed individual get the utilization period extended from 8 to 24 weeks for loan funded before? So I think I addressed that one. Hopefully I addressed that one to your satisfaction, Ed. The utilization period is extended as part of the Flexibility Act that Congress passed on June 5th. What you would need to work with your bank is if you had dollars that you end up owing. If you have unforgiven dollars that you have to pay back and you were funded before June 5th, you're going to have to work with your bank to extend the repayment of that from a 2-year window to a 5-year window. But otherwise, I think you're good. I can't imagine why a bank would not work with you on that topic. That is our explicit understanding of the law. Okay, didn't reduce pay. Is this the rate of pay for total compensation for an FTE? For instance, pay rate of $15 an hour remains the same, but hours were reduced. Does this disqualify a company? So the test is that you didn't reduce pay by more than 25%. So if I've got human being A doing a job at $15 an hour before, whether that same person, could be human being, B comes back after opening, maybe they make a little bit more, maybe they make a little bit less because it's a different person that earns a little bit less. Maybe it's a salesperson who can't sell anything because no one's buying anything in a pandemic. It doesn't matter. The test is on a per employee basis. To see if pay was decreased by more than 25%. So it's not. And if you qualify to use the easy form, you're not going to have to calculate FTE for hours, because as I'm rereading this, I think there's two questions in here. One is a salary test, the other is an FTE test. There's not an FTE test as part of the easy form. So if you've qualified to use the easy form, then the hours worked won't matter. But I think explicitly, I think inherently in your question, if you're reducing hours, it's an hourly job, there's a chance you're going to cut pay by more than 25%, in which case you might not qualify to use the easy form. So depending on how much the hours were cut, therefore how much pay was reduced, is going to impact whether you can or can't use the easy form. And that's going to be a question for your bank. Can you elaborate reduce pay? So I think I did just a second ago, probably looking at the timing for your question, Michelle. So hopefully you got that answered. But reduce pay just it means exactly what it says. So if you let's say you implemented pay cuts, hey, our business has been terribly impacted. We're gonna cut everybody's pay across the board by X%. Maybe we're only going to cut certain people's pay by X% and other people's pay by Y%. Maybe I haven't cut anybody's pay, but I've got a bunch of salespeople who are making a certain amount beforehand, and they just simply can't successfully sell. Therefore, their pay is cut. Completely out of your control, perhaps, but it is still a reduction in pay. If you shut everything down because of a stay-at-home order, 2-3 months later, you reopen your business, but you hire everybody back, and maybe you don't have the same employees, maybe it's different human beings, but you brought them back at a lower hourly rate or a lower salary. All of those are different forms of reduced pay. I don't think the SBA cares necessarily. They've given great leeway for the nuanced differences in the way people get paid. And so they're not getting wrapped around the axle for all of the different ways somebody's pay could get cut, but also eliminating, gamesmanship and loopholes created by getting too specific in the rules. And just says, what did they get paid before? What did they get paid during the comparison period? And if it's less than the 25%, then you have it impacts your forgivability. Do you count yourself, next question from Bonnie, do you count yourself in the employee count if you're an LLC owner? I'm going to do my best to answer, Bonnie, but at the end of the day, that's a bank question. As I understand it, for sure in the long form that we reviewed on June 3rd, there is a completely separate section of the Schedule A where the for owners pay, whether that and that's whether you W-2 yourself or it's Schedule C income, and you only take distributions, but it's completely carved out separate on the long form. So I think there's here be my best guess. Because the easy form does not specify a different place, then it kind of presumes that you are commingled in with other employees. But again, the real answer is it's what your bank's going to tell you. So hopefully that gives you some directional guidance, Bonnie, as maybe a way to phrase the question for the bank. We put 0 for employees if we're self-employed. So if you're self-employed, if you're a sole employer, you would be that one employee, I believe. So next question. I work for a nonprofit. We get most of our funding from federal and NYS grants. I have an employee had determined due to loss of grant funding. Does this qualify to use the easy form? You know what? That one's way too complex for me, Paul. I apologize. That's such a specific. I understand you lost them due to grant funding. I would suspect that it's the answer is going to lie within the reasons why you lost the grant funding is probably where the bank will interpret that. All right, it's a good question, Gina. So on the EIDL application number, how do you have a number if you did not apply for it? So then you have to leave that one blank. So the guidance there, Gina, is if you put a dollar amount for how much your advance was, then you've got to put your application number. If you didn't even apply, then you don't have a number to put in. I got time for a couple more here. Does it mean the EIDL advanced will be deducted? Okay, so if you and this was right from the jump in the when the law was first passed, when the CARES Act was first passed. So the economic injury disaster loans, the EIDL loans, first came, I want to say it was like mid-March, right, as the shutdowns first started to happen. Before the CARES Act existed. And so SBA was lending money directly and giving these advances up to $10,000 as a form of relief. So that was a way the government tried to act real quick before big sweeping legislation came in. And so when they passed the CARES Act, the PPP program was a component of the CARES Act. What they wanted to make sure what didn't happen is you say got $10,000 for free out of an EIDL loan, and then you got another $10,000 for free in the form of a PPP loan forgiveness. So if you got money as an advance, those advances were not loans, they were grants. And so that dollar amount is going to count towards the forgiveness portion of the PPP loan. If your pay date fell on the same day you received PPP funds, does that pay count towards forgiveness? So I actually talked to a small business owner recently about that exact question, and the answer that their bank gave them was they could not use the alternate pay period method because that employer wanted to use the following pay period, but the way their bank interpreted it was that because they got funded on day one of a pay period, that became the comparison period. So at the end of the day, that one's going to be determination from your bank. If I remember from that thread, they didn't answer that directly. They actually got the answer from the SBA before they gave our client the answer. All right, I'll take time for one more here. See if I can, and forgive me guys, we have probably 100 questions that I'm not gonna get to them. I'm gonna scan them, see if there's anything else. We've got a commonly repeating question. Can we hire more employees than we indicated? You know what? I won't even count that one towards the final one. The answer is yes. You can hire as many people as you want. The purpose of the PPP was to not lay people off if at all possible, and to bring them back as fast as possible and pay them as much as you did before. It's designed to protect jobs. So the answer is for sure you can. My headcount, last question here I'll take from Cassie. If my headcount is reduced by 1, does it mean the whole loan is not forgiven? So no, it's not binary. But if you're reducing headcount, first of all, it's going to depend, Casey, on the reason for the reduction. So if you can provide some type of an audit trail between a text thread or an email or a letter or something, it'd probably be up to your bank whether they would accept extemporaneous notes. But if you have an employee who refused to come back for any reason, then you don't get dinged for that. And even if you did, you have until December 31st to bring someone back and make whole. So if if you do have a reduction in headcount, the worst case scenario is you might have to fill out the long form that we went through a few weeks ago instead of the easy form. So it's a little bit more of a pain in the rear to complete that process. But then it's still going to be prorated. The qualifying payroll expenses will be forgiven. The PPP loan forgiveness is not binary, all or nothing. It's just making sure you follow the rules to the best of your ability, and so that it gets prorated. The more you follow the rules, the more you get forgiven. And they're trying to really work with this Flexibility Act that passed, really doing their best to make it so small businesses can get their entire loans forgiven if at all possible. Okay, guys, wish I could answer all the questions. Hopefully this is helpful. I'm super excited about this easy form, and not just the easy form, but the Flexibility Act. I think it was an absolute game changer. There's so many businesses that just could not take advantage of all the good intentions that came with the original PPP program. But the extension to 24 weeks, huge. The reduction from 75% down to 60% for required to spend on payroll. For some businesses, that's huge. Changing the window to pay back, again, huge. Extending the window to the end of the year to get back to full headcount. For some businesses, again, huge. So it's a fantastic program, really has the ability to be a game changer to save many small businesses. And really, as I think there's going to be a bit of a new normal. I don't think we're ever going to return to the way things always were. But as we return to a new normal, that these dollars can really be game changers to help grow businesses and help entrepreneurs, business owners, executives of small businesses to put this money to work and get their companies growing again. And we would love to participate in that. So with that, I wish everybody a safe and happy 4th of July. And we will be taking next week off from our webinar series, and we will talk to you when we return. Our next webinar is going to be on COBRA as it relates to changes facing the coronavirus pandemic. So regrettably, sometimes we still have to business in this tough business cycle. Some people do have to be laid off, and employers are required to provide that continuing insurance through COBRA. But COBRA is not the same as it was pre-pandemic, so there's some things you got to know, and we'll talk about it in 2 weeks. So have a great 4th of July. Talk to you guys later.